This is LANEMetrics, and in this video I'm going to walk you through the entire setup process from start to finish. But I want to be clear about something up front. This is not a simple rate per mile calculator. In this industry, there has never been a way to see what you actually take home on a load after tolls, weight distance taxes, IFTA fuel surcharges, self-employment tax, federal and state income tax, and every other hidden cost that eats into your profit. What you're about to see is a financial planning tool that changes that, and it's one you'll use daily for estimating your minimum rate on any load. Once your numbers are in, you can change any value at any time and instantly see how it ripples through your entire operation. Want an extra $10,000 a year in your pocket? That doesn't just add $10,000 to your gross, it might mean $18,000 more because of how taxes, fees, and expenses all cascade off each other. That requires PhD-level mathematics running 196,000 calculations simultaneously in 1.6 seconds, and you're looking at the only software that does it. There are two simple pages to fill out: your vehicle specs and your baseline numbers. The whole thing takes about 10 to 15 minutes if you have your numbers handy. You only do it once, and you can change anything at any time. And once we're done filling everything out, I'm going to show you exactly what the app calculated. Every expense, every tax, your complete financial picture for the entire year. Then some of your yearly values are used to dynamically calculate your minimum rate on any lane, any load, anywhere. You're going to see how some of your costs are interdependent, connected in ways that have been impossible to calculate until now. Let's get into it. The first thing you will need to do is add your vehicle specs, which are used to help make sure the routing on any lane is handled according to your specific vehicle. If you have ever set the defaults for a trucker GPS, then this should be familiar to you and is very simple and straightforward. For any value that you are unsure of, you can use an estimated guess, then come back later and update it with the correct value. The onboarding process for LANEMetrics is a two-step process, and you will not be able to proceed to the baseline numbers page until this page is completed. It is important to note that any field with an asterisk symbol to the right of the field description means that field requires a value be inserted. Others which are optional can be left with our default value, or if you have inserted a value in an optional field and wish to remove it and not use it, simply delete that value and leave blank. You will begin to realize quickly just how in-depth LANEMetrics goes when you see all of the various options for the toll transponders which are supported in order to get accurate toll charges on any lane you rate. Any discounts you receive from your specific toll pass will be reflected in your hidden costs. Now we will look at the baseline numbers page. The first thing you are going to notice right away is we're asking for driver net pay. This is not what you expect to gross as a driver and then have to pay your taxes on. This is what you want to pocket at the end of the year after all expenses and all taxes are paid, including self-employment, federal tax, and state tax. This is one thing right here that sets this software apart from anything that's ever been created before. No software has ever had this capability. Reverse engineering your numbers based on what you want to net. The next thing you're going to notice is you have a fuel national average. We pull in the fuel national average per gallon as a reference at the bottom, and that comes directly from the Energy Information Administration updated weekly. This is the national average price for a gallon of diesel, the number all carriers set their fuel surcharges based on. So you can use that as a guide. If you want to make $70,000 per year net, we will enter that amount, then we will use the national average of $4.86 per gallon for our fuel costs. We also show you the approximate national average for a gallon of DEF fluid at $4.11. Then you want to enter your speed. This is the speed your cruise control is set at, 70, whatever it may be. We're going to use 70, and we're going to be setting this up as if we were an independent owner-operator with our own MC number, a motor carrier, and a semi-tractor trailer operation. All miles for the year includes all your deadhead. So every mile the truck moves for an entire year, we'll call it 120,000 miles. That would be an average of 10,000 miles per month. This is very important. You want to be specific and calculate this out because we use the number of days on the road for multiple things within our algorithms, one of which is your per diem, which is a tax deduction, and we figure that based on how many days you're on the road. So we're going to call this 250 days on the road. And you'll see that we have a check that pops up. This is something that once you have your baseline numbers set and saved for the first time, there's a place in your profile settings where you can turn this on or off. All this does is a validation check that makes sure your days and miles make sense. You wouldn't want to have 100 days on the road and 120,000 miles showing a 1,200 miles per day average. That would be impossible for a solo driver. So this just helps with that. If you want to see it, we can change this to 280 days on the road, and the validation check will not pop up, meaning you're well within acceptable limits. Empty mile deadhead is what average percentage of your 120,000 miles a year you expect to be deadhead. Most carriers have about a 10 to 15% deadhead average, so we'll just say 10%. Your mile per gallon would be what is reported on your IFTA fuel tax return that you file every quarter. That average mile per gallon includes all loaded and empty miles. We are going to say 6.85 miles per gallon average. Next up is showers and prepaid parking. We have a routine maintenance interval of 25,000 miles costing about $650 each time. Truck washes, we figured one per month, so 12, at a cost of $140 each. Steer tire lifespan, 125,000 miles, we're looking at $1,100 each. Drive tires, 150,000 mile lifespan, $450 each, and we have 8 of them. If you are running super singles, you would only have 4. On trailer, if you are power only or a box truck and you don't have to provide a trailer maintenance, wear and tear on tires, etc., then you can just leave these blank and it will not calculate you having a trailer. For idle time parked, we have used a diesel APU, or you can use, for example, idle tractor engine. For the $22.90 Internal Revenue Service highway use tax, approximately $550 a year. Base plate is $2,250 per year. UCR filing fee for motor carriers, approximately $50 per tractor. A total of all of your insurances, and be sure you include everything that applies to you. A lot of people do not include health, dental, and vision. These are all things you should think about because if you were working for another carrier as a W-2 employee, you would most likely be getting access to those. Those need to be included in your insurances. Another big one is weight distance taxes. Permanent accounts. Connecticut does not issue temporary permits, so if you plan on traveling through Connecticut, you will have to have a permanent weight distance tax account. Kentucky has one, which is a KYU number displayed on the side of your tractor. New Mexico, New York HUT tax, Oregon, any of these that you do not check as having a permanent account, we figure those based on what it costs to obtain a temporary travel permit for that trip, so it all works accurately. Legal max weight, principal payment, interest payment, and depreciation. This is talking about your truck and or trailer only if you are purchasing them or making payments on them with the intention of owning them at the end of the contract. This is important. This is all handled within your tax calculations. We're going to say our principal payments total $20,000 per year, which, by the way, principal is taxable income. Only your interest and depreciation can be deducted. We will say $8,000 per year for interest, and the depreciation we're going to claim for the year is also $20,000. These should be whatever your numbers are. Non-owned equipment, we don't have any, so we're going to leave that blank. That would apply if you were renting a trailer, for example. The type of trailer and cargo would be dry van, reefer, or flatbed. If you select dry van or reefer, we're simply going to ask you what you charge for each extra pick or drop. In other words, if you have 1 pick and 3 drops, we will automatically apply the extra drop fee to the rate. Here I have it set at $75. Since this one is a reefer operation, how many hours per year do you plan on running the unit? What is your routine maintenance interval for the unit, and what does it cost you each time? Here we have 1,800 hours for the year, 1,600 hours maintenance interval, $700 each time we do the maintenance. Hazardous material. Most of you will not be doing this, but if it does apply to you, you check this box and you can enter what your surcharge is per mile. You may want an extra 50 cents per mile for that. You could simply say 0.5 and done, and that will automatically be added to all loaded miles when your rate is calculated. If you have liftgate service, you can add that. Factoring fee. If you are using a factoring company, you simply put in what percentage they charge. We'll just say 2% for now. And if you have leased onto a carrier, or if you have a dispatcher that you've hired, either one are charging you a percentage off the top of your gross for that service. You could enter that here. We'll call it 10% for a dispatcher portion. If this was a carrier portion, it would show you what the gross of the load needs to be to the carrier, not your percentage. If you would prefer to see it as what rate you need to be making to your truck after the carrier gets their 10%, then you would leave this blank and not enter a percentage. Next, we want to know what percentage of your gross you are going to keep as escrow, which is the profit you as a company wants to make as a net profit at the end of the year. This is a percentage of whatever your gross is. Making large tractor-trailer equipment payments, 10% is a decent profit margin for your company. But if you already own your tractor and trailer and you don't have equipment payments, you would want to add another 10 to 15% to this as well. So it may be 20 to 25% due to the fact of having to earn enough income to have replacement costs for that equipment once it's worn out. Miscellaneous expenses, $5,500. And you can see we have it all listed here. It is not completely inclusive. It includes things like accountants, office supplies, postage, specialized clothing, banking fees, any hotels you might have, your ELDs, your load boards. All of that would go here, tallied up together and entered as one lump sum. And you can always come back here and update this value if new expenses occur which were not present earlier in the year. Our state tax calculations are based on the state you reside in. Some states have no taxes. Some states have very complex tax calculations, and we handle all of those. For marital status, you can select single, married filing jointly, or head of household. Once you hit save, it's already calculated. And here is your year summary. You can see here a driver net pay is $70,000. 10% of the gross of $317,000 would be the $31,700 that your company is going to profit. Carrier dispatch percentage was 10%, so it's also $31,700. There's your 2% factoring fee. Here's your $28,000 for your equipment. You can see everything right here. You can see your self-employment tax, federal tax, and state tax. Here's your gross revenue, gross profit, your equipment principal, and your deduction. And we break this all down much more in the actual tax calculations. You can scroll across. At the top, you can see all of your taxes and all your different expenses broken down by category. Your hours of service. We break it down on a 7-day week, how many drive days you're going to have for the year, and by the hour, how many hours you're going to be driving. And as you can see right here, 54.42 miles per hour is the average that results from 120,000 miles for the year over 280 days. Moving to your time analysis, you can see at 70 miles per hour, 61.6 miles per hour is your target average. So when you see here you only have 54 or 53, this is based on either running on all recaps and having to reset, or if you're the type of person that prefers to not do resets, we have it broken down for you both ways. Either way, you can go back and do less days on the road and get this closer to matching your 61.6 mile per hour average to be a little more accurate. We also have a tool here which shows you how your fixed costs are affected by the number of days you're on the road. because your fixed costs never change for the entire year. Whether you drive 10 days a year or 300 days a year, your fixed costs stay the same. So your per mile cost can vary greatly. If we back it off to say 200 days on the road, you can see what your numbers are and watch them change as you adjust your days on the road with the slider bar. Then, as we increase the days on the road, your fixed cost per day drops, your cost per mile drops, and your per diem for the year increases. Just remember, this tool is located under Time Analysis. You can see everything right now. Your fixed expenses are projected to cost you 50 cents on every loaded mile. You can see how this breaks down by the hour, by the day, by the week. It's broken down by equipment, costing you 26 cents. Insurance is 16 cents. All your legal requirements, which would be your 2290, base plate, and UCR, is 3 cents per loaded mile. All your miscellaneous expenses is 6 cents. We were very granular with this so that everybody understood it. Your company is profiting 29 cents a loaded mile. You as the driver are personally profiting 65 cents a loaded mile, combined for 94 cents profit per mile. This is telling you what you have to be charging per mile. You need to be at $2.94 a loaded mile with fuel cost where it is right now. Now here's where it gets really interesting. Notice your year gross is $317,836. Now we go back to your baseline numbers and do something very simple. We will say fuel is only $3.50 per gallon, hit recalculate, and instantly you're at only $283,012 gross and $2.62 per loaded mile. And this is just one of the various ways that LANEMetrics can automatically and dynamically calculate your numbers in ways which were never thought possible. If we go back and say we want to see how it changes if we're married or single, change it to single, save it, and before you can even switch pages, it is ready for your review. There it is. We come back and we expect it to go higher because the tax deductions on a single person are less, and it did. Now you're at $2.65 per loaded mile. And you can also change your desired profit. From $70,000, we'll say $60,000. You would expect it to go down by $10,000, but it will actually go down by a lot more than that. On your gross, we went from $285,000 down to $269,000. Where did the other almost $6,000 go? It's all in the gross, because taxes, factoring, dispatching fees, and your company profit are all factors of your gross. So when those go down or up, it changes exponentially. These are just a few demonstrations of how powerful this software is. I'm not going to go into every detail, but we wanted to give you the highlights of this part of the app and show you where these basic things are located. It's actually kind of enjoyable to go through and change things, change numbers, and finally, for the first time in our industry, be able to see how everything affects everything else. Because as we stated, many values are interdependent on each other, and our mathematical algorithms are extremely complex. So now you understand the value in LANEMetrics, and this is only your baseline numbers. If you had your numbers ready, it probably took you about 10 to 15 minutes. And here's the thing, you never have to do all that again. But you can come back and change anything, anytime. If you want to try married versus single and see what happens, change it. If you want to move from New York or a state with income tax to, say, Texas where there's no state income tax, change it. See how it affects all of your numbers. You can change your profit any way you want. Everything ripples through every other number in the operation. And it is extremely important that you understand, educate yourself, and know how this all works. And until now, there's never been another software to do this. And this is just your baseline numbers. That's before you even rate a single lane. If you think that's really mind-blowing, wait until you see what happens when we plug in an actual load and start pulling in all the hidden costs on any specific lane anywhere. If you'd like to see how the Rate a Lane feature works in detail, or if you want to see a complete demonstration of everything this app is capable of, both videos are linked in the description.